I know there's a lot of information out there giving business owners advice, especially if you're new in the business, you're a young entrepreneur. When I say young entrepreneur, I'm not talking about age, but more so where you are relative in the years experience to being an entrepreneur. A lot of information out there in regards to all the different things that you can write off as a business expense, traveling, clothes, different things that you can do. Especially like you want to take your vacation and say you're going to meet a person there, you can write it off as a business expense. Different kinds of equipment, things around your house, furniture and stuff. They can be listed because you purchased it in your business name. It can be listed as a business expense and written off on your taxes as a business expense. That's true. The issue that comes up is be very, very careful because that amount is all relative. Don't be so quick to want to write stuff off as a business expense because you heard you can write it off. Because theoretically, anything that you purchase in the process of doing your business, you can write it off. The issue comes up is that if you got a business that's only making, a couple $100 a year or a couple $1,000, but you got five, $10,000, $15,000 in expenses that you wrote off all your living expenses as as different business expenses because you got an LLC, you're gonna get your butt audited. I just want you guys to understand that it has to be relative, okay? You want to make sure you're doing it the right way. I always encourage people to get professionals. Get your attorneys. Make sure, most importantly, get your accountant, get your decent bookkeeper to actually explain stuff because, again, there's no shortage of information out there in regards to all the stuff that you can write off as business expenses, things like that. And because a lot of people think because they actually have a business entity, the tax ID, and the business structure is set up there with the business bank account, that because you're paying for it through there, it can be looked at as a business expense. Yes, you do have that startup phase where your business is new and it's starting up, and those, it's nothing uncommon for a new business, to be acquiring different things to start that business up, i.e., equipment, computers, office building, vehicles, things like that during the first 2 years. But again, it still need to be relative. Do not put yourself in a position where you can get audited because you heard that again because you have the business set up, you can pay all these things off through your business, and you don't have any kind of activity, i.e., business. I'm sorry, i.e., revenue, to justify it. It's nothing again. It's nothing uncommon for you to have more money going out the first couple of years because you're starting the business up. But be very, very conscious of what you're writing off and the in proportion of it, because you sit there and say to yourself, we got $15,000, $20,000 or even more in expenses going out each year because we're writing all this stuff off, but you have minimal activity going up. Yes, you do have a startup phase, but again, it's still relative. So if everything's legitimate, regardless, be prepared because in the event you get audited, especially even like now, everything's done through computers and artificial intelligence with the audits. They don't necessarily have people scanning everything like they did 5, 10, 15 years ago. Right now, they got the computers looking at trends and things like that. So you have minimal amount of money coming in, but you have all this money going out. Do not be so quick to want to just run stuff out there if it's not legitimate business expenses and end up getting audited. Trust me, you do not want that headache. Just want to give you the guys that quick bit of advice.